feels like some technology is utilized and it just kind of slows things down because it takes so long to implement. People aren't used to it. It's really hard to integrate into current systems. Various industries, whether it's healthcare, business, education, where are you seeing some really innovative uses of blockchain technology that's, a lot of the benefits with blockchain, it's safer, it's reliable, it's transparent, right? So where are you seeing it being utilized in a really meaningful way? Feels like some technology is utilized and it just kind of slows things down because it takes so long to implement. People aren't used to it. It's really hard to integrate into current systems. So where do you see blockchain being utilized that's really beneficial to various sectors?
Yeah, I think it's so difficult to describe blockchain and it's just broad and it's very nuanced. So what I'll say is I'll segment it into buckets. There's this bucket over here, which is Bitcoin and Ethereum and cryptocurrencies, right? And I've kind of described how my views on that. That is the most important use case thus far, right? Especially in the developing world, they're using Bitcoin and Ethereum for everyday business, right? Because they have autocratic regimes that prevent other kinds of, we were talking just before this about ministries using stable coins and other US dollar-based stable coins to effectively transmit money for free to their ministry partners in closed countries with no fees and no need to go to a bank. That's a big innovation.
Right.
So that's one bucket, is the digital finance piece. The other is what's called permissioned blockchains. These are business blockchains that are, you have to be in a consortium to use it, right? It's not permissionless, is what we call like Bitcoin. Anybody can use Bitcoin. Anybody can use Ethereum. They're all permissionless. You don't need permission from some corporation to use it. That's the beauty of it.
Right.
But in certain circumstances, they've been developed what's called permissioned blockchains, which is like a company or a group of companies in a consortium that needs to share information, but in a very private way, but in a way that is still, you don't trust your counterparty. Like, you're doing business with them, but you're not going to just trust them with all of your data. Right. So that's a permissioned blockchain ecosystem where they set the rules and the members of the consortium operate within that. So there's huge implications in healthcare, in logistics, and those have been talked about for years. But the Gartner hype cycle suggests that, there was a big spike in like what you call like this fury around blockchain technology. It was sort of a hype cycle, if you will. And then there was this trough of disillusionment for a year or two where people were like, this will never work. And now we're in what's called the plane of productivity. That's what Gartner calls the plane of productivity.
Right.
They monitor all new technological innovations and put everything on that scale. So with these kinds of innovations, we're on that plane of productivity where you're not hearing as much about it, but you're seeing companies realize, yeah, this makes sense for a lot of supply chain. Like luxury good brands are adopting it like crazy. Nike is adopting it. Starbucks is adopting it. They are probably adopting more sort of the non-fungible token, like reward side of it. But there's a ton of use cases in those two areas. The third that I think people don't know as much about is the tokenization of private assets. So let's take real estate, for example. It's traditionally an illiquid asset that's not publicly traded, unless you have a REIT or something, in which case the people that manage the REIT are the ones that win, right? Because they reap fees regardless as if the real estate goes up and down in value. So tokenized real estate is simply bringing public market level liquidity and transparency to private markets. So I'd be able to buy. In fact, there's a building in Dallas off of 635 that's been tokenized. The whole building hasn't, but about 20% of the cap table or the ownership of the equity of that building has been tokenized. So I can go and purchase a share of that on a regulated, that's what's called an ATS, alternative trading system. So that is coming.
And what are the benefits of that? So what would a property owner or a commercial space owner, what would incentivize them or push them to move towards that?
It's a good question. So the first thing is for the property owner, it's more eyeballs on their building. Right now, the only reason they can like sell equity is if they know syndicators or they know high net worth individuals that would be interested in their, buying a big chunk of their equity. But if you create an arrangement like a public market, like an exchange, there's 13 exchanges in the U.S. The two most well known are the Dow Jones and the NASDAQ, the New York Stock Exchange and the NASDAQ. And so there's 11 others, though, that people don't really know about. But if you create an exchange where these ownership, just think about it as shares, really.
Right.
They're wrapped up in a blockchain wrapper, but you don't even have to know that exists, right? You can just buy and sell shares, right? And they use blockchain in the back end, right? So to be able to get that number of eyeballs on their deal from international investors that they've never heard of or would have no way of knowing. So it creates, if you increase the number of bids and the asset stays the same, it's going to be good things for price. So it's just a little bit of supply and demand there. For the investors, it creates liquidity. So it creates an opportunity to get in and out of their investment very quickly. Whereas with the syndication, you might wait 5 years for the building to sell or for some sort of transaction where you can realize profit or hopefully profit. Sometimes it's loss. In this case, you can trade your equity ownership daily.
Interesting. That's fascinating. So it makes an illiquid asset suddenly liquidable and moving rather quickly, can exchange hands even in multiple days. So have people, if you own a majority share of that and it changes within 24 hours, I mean, have insurance companies considered the consequences of this? I mean, that has a pretty large domino effect on even liability and who's liable if something happens.
Yeah, there's ways to structure the operating agreement where when that value changes hands, there's quarterly votes for the management company that's overseeing the property. So even though the majority ownership changes hands, you can keep the same management company and all the insurance stays the same. Now, what I will say is there are some added legal complexities there, and for that reason, most developers are tokenizing less than half, so that the majority they're not risking changes to the operating agreement, so that maybe they're 49% of the equity is trading in an open market, and the rest is locked up by some key syndicators, some key investors that constitute a majority share of the asset.
Right.